Hey there, good morning, everybody. Tim from Alpha Wolf Trading coming at you with this week's market overview and stocks to watch for trading and investing for the week ahead. And boy, what a week we had last week, right? A lot of volatility, and we are doing some technical damage in a lot of the sectors out there. I was concerned about it last week. I remain concerned about it this week, and I still believe that this is a time to be cautious, especially with those swing and long-term hold considerations for long biased trading. And we're just seeing a lot of technical damage out there. Volatility has picked up, and I think volatility is going to stick around for a while. Uh, this rhetoric between China and the U.S. does not seem to be coming to an end anytime soon. And I don't think we're going to get a trade deal anytime soon. I think there's going to be more uncertainty out there, and uncertainty creates a volatile market, right? The markets do not like uncertainty. Inverted yield curve, all kinds of stuff happening. I mean, we may be just in the process of convincing ourselves that we need to go into a recession. I don't know. Maybe we're trying to talk ourselves into that, but um, definitely a time to be cautious. At least technically, that's what we're kind of seeing out there. We'll get to that in a second, but let's take a look at what we've got coming up this week in as far as economic data. We've got durable goods, capex, Case Shiller, home price index, consumer confidence index, weekly jobless claims, GDP revision, personal income, consumer spending, core inflation, Chicago PMI, and consumer sentiment. So we do have some data that could impact the markets this upcoming week. After the close on Friday, Trump, announced increasing, adding another 5% to the tariffs that are already established. I think on the $200 billion, and then got another additional $300 billion. Got instead of 10%, September 1st, it's going to be 15%. So things escalating. That was announced after the close. We got the G7 happening, the summit that's happening right now, and maybe good things come out of that. I don't know, but I anticipate that come Monday morning, we could see a pretty decent gap down. Now, listen, if we get to, the one thing about really extreme moves in either direction, up or down, is that it creates a snapback opportunity, right? So that is something that you need to be aware of. If we get a big gap down, it doesn't mean that we can't get a nice little bounce back and create an opportunity for a snapback play. So keep that in mind when you get those real extremes. One thing I can tell you is we're not seeing extreme fear yet in the McClellan oscillator, or even the other indicators I use, the T2106 and T21 or T2107 and T2108. Those are not really extreme. We'll look at that in a minute. But this week, the one sector going through my 4% scan that was very clear, at least from Friday, was gold. Right, gold miners, silver miners. There was my whole list was just filled with a lot of minor names. So GLD itself is coming up into this trend line resistance, but certainly looking like a potential breakout here. So keep that in mind. If there's continued weakness in the markets, I think as a safe haven, flight to safety, gold can play that role. And for a short-term trading opportunity, some of the gold miners could be something that you want to take a pretty close look at. Gold and silver miners. IBB, mentioned it last week that we had broken through this trend line, trying to get back above it. We've failed. Now we're coming back to a triple test of potential price support. Not looking real good for the IBB. Looking guilty till proven innocent, right? IWM also closed below this trend line. This was a double bottom, but now we're getting a triple test, and I think potentially looking to break down below that line of potential price support. And then the next real, where is the next real area of price support? And that could be somewhere down in the 135, 1.4. Maybe we get a little bit of support at about 142 or so, but IWM small caps not looking very encouraging. JNUG and Nugget, if you don't have any specific individual names that you'd like to play, those could be a couple of ETFs to keep an eye on for a long trade opportunity. If you don't have a specific, minor stock that you like, these two are worth keeping an eye on. QQQs broke below the trend line, below the 50-day moving average, looking as though potentially we could be coming down to test the 200-day moving average. SMH also below the 50-day moving average, kind of got a bear flag look here on the daily time frame. S&P 500 broke below this trend line. Looks like we're coming down to test this 200-day. And look, the 200-day is going to be that's going to be a battle zone. We lose that 200-day and things could get ugly pretty quick. So keep that in mind with the S&P 500. TVIX, UVXY, both volatility indexes coming up into a trend line. And potentially, if the markets continue to roll over, you could see a nice short-term trading opportunity in TVIX or UVXY to the upside to go long, right? If we see some real fear take hold in the market. USO. So last week I thought potentially energy one more time was maybe an opportunity to play to try and go long again, and then oil pulled back and energy names. They had, I think for one day, actually had a pretty nice day, and then pulling back again. I mean, and oil and energy continues to be a very tough place to try and call a bottom. So be careful there. UUP, the dollar took a pretty big hit on Friday, and I think you want to keep an eye on that as well, is see if the dollar continues to weaken. If that is the case over the long term, that could be a good thing for equities if the dollar weakens, but we'll see how it plays out. UVXY, talked about that volatility, right, coming up into this trend line, and kind of got a little bull flag scenario going there, but short-term day trading opportunities is what I look for in UVXY and TVIX. XAR, aerospace and defense, which has been one of the strongest sectors out there, pulling back and testing this 50-day, testing this trend line. And eventually, if the market continues to weaken, even the strongest sectors will eventually be taken down with the rest of the market, right? So it wouldn't be and this one has been holding up very well. If this thing finally cracks, who knows where we pull back to? Could be all the way back to the 200-day, where there's some potential price support right around the $95 area. But aerospace defense looking like it's starting to succumb to the overall market fears. XHB home builders closed below the 50-day, coming down and test this trend line. XLB building materials, even though we did get some positive earnings from Lowe's and positive earnings from Home Depot, actually closed the week below the 200-day, which is not a great sign for building materials, right? XLE Energy pulling back, could be trying to find, maybe we get a double bottom bounce here, but energy's been, like I said, it's been a very tough trade. And if we take this 55 bucks out, I think you're going to come back down and test those December lows. XLF financials, right, breaking below the trend line, closing below the trend line, testing this as a potential double bottom, but we'll see it. I mean, actually, you had a double bottom here, right? This is like a triple test, not looking real positive there for financials. XLI industrials, looks like we closed below that trend line, closed below the 200-day moving average, just not a great look there on industrials. XLP, consumer staples. Now, this could be an area where money flows to. However, valuations within that space are not cheap already, but that could be a spot that money does flow to because it is considered a safety trade. But testing this 50-day as potential support. We'll see what happens with consumer staples next week. XLV healthcare broke below the trend line, below a 50-day, below the 200-day. Not looking great for healthcare. Could be an area of support here right around, what is that, 88. See if that holds as support. If not, we could be heading down into the 80, what is that, 80, 84 range. Consumer discretionary, not a great look here underneath the 50-day. Tried to get it back above it, failed. Now we're testing this trend line. We'll see if that can hold the support, but if not, likely coming down to test that 200-day moving average. XOP, oil and exploration, just looks terrible. And retail, even though we had some great retail numbers, some surprise numbers actually, did not do well, and I think that primarily has to do with the trade war rhetoric, right? So yeah, we had some good earnings, but now with these new tariffs and new categories that are going to have tariffs on them, that is putting some yeah, we had great earnings, but what does the future look like? Not looking too good if this trade war continues to escalate. So, especially for the retail sector. All right, so let's take a look real quick at the T2106, the T2107, T2106. So McClellan oscillator. Look, we're kind of fiddle in the middle actually. There's not any sign of extreme fear here. Get down to negative 180, negative 200, negative 300. Hey, guess what? We've got some real fear right now. Not so much. So, maybe that changes Monday, right? If we have a big gap down on Monday, maybe we start to see some extreme levels, and that could be a time where we look to maybe get an oversold bounce. But I think it's short-term lived. I mean, you can have some great rip-your-face-off rallies, but I would not be jumping in thinking, okay, this correction is over. I think we're starting to do a lot of technical damage, and while we may have some nice bounces, I don't think that I don't think this volatility is over by any stretch. So. T2107, right? We get down into remember, this is 20 and below. Things are getting really overdone. Get into the single digits. This is like 7.5, or you get into single digits, then it really is an attractive opportunity potentially to be aggressive and going long. We're nowhere near that, right? So. Kind of fiddle in the middle right now. T2108, 20 and below. But I mean, like I said, this can get down into the single digits. This can get down into, 5 and 3 and 4, right? I mean, those are areas where things are extremely overdone. We're not there. So Maybe we head that direction. Maybe we get to those levels in the next couple of weeks. But for right now, this is just a time to be very, very cautious, especially with swings and long-term hold considerations. If you want to dip, that's not saying you can't dip. You identify an area where there's a potential area of price support, and you think that's a spot where maybe you'd like to start dipping the toe. Go ahead and dip the toe. Just understand that if things continue to, if the market continues to struggle, things can get overdone, right? So they can go to that next level of potential price support or even the level underneath that. So just play size appropriate and start nibbling. Don't go all in. All right, let's take a look at the stocks to watch. So I'm pulling everything off of the stocks that are actually reporting earnings this week. I have a full list of stocks for the pro members that I'll be getting out shortly. But for this list, I'm just pulling stocks off of who has earnings coming up. So Box, this is not a great looking chart at all. Actually, kind of have a bear flag going on here below a declining 50-day, declining 200-day. I don't know if this is all-time lows or not. Let me take a look. No, it is not all-time lows. Next area of potential price support could be somewhere around, let's see, 11 and change, 11.50 maybe. But this bad boy could go all the way down and test, $9. It looks like as potential price support. So if these guys report a decent number, you might get a nice little bounce here. I think they report. Let's see. Let me tell you exactly when they report. They report Wednesday after the close. Maybe this gets a little action heading. It did hold up on a weekday on Friday, so maybe it gets a little action heading into earnings. I wouldn't hold it through earnings, right? So maybe you get a pop up into this $15.50 area, $15 heading into earnings. Worth keeping an eye on it after earnings, depending how they come in. If they report a strong number, maybe that's when you get a pop up into the 15.50 area. But this stock is in a long-term downtrend. I would be careful, but there could be a trading opportunity in it next week. iClick, so these guys report Monday before the open. Also not a good-looking chart, right? We've got a bear flag on this one below a declining 50-day, below the 200-day. I had a pretty extreme little sell-off here, a little snapback bounce. Maybe this comes back down, you get a double bottom test and a bounce, just looking for a trading opportunity. You actually have a double bottom on the daily, which is kind of interesting, right? You got a double bottom in this 270 area. You break below that, and, who knows where we're going because that is all-time lows. So worth keeping an eye on this for a potential trading opportunity. If they give, have a good earnings report, give a good guide, maybe we start to see the beginning of a trend reversal, long-term trend reversal, if we can get above this trend line. So at least worth having it on the radar. I certainly wouldn't chase any kind of a gap up on this unless, the earnings are just unbelievable and the guidance is fantastic. I still wouldn't chase the gap. I'd look for an intraday setup, but worth keeping an eye on. iClick, Billy. So Billy is a China name, so I'm not exactly sure how this one is going to act, but they have earnings Monday after the close. You do have kind of a potential double bottom on the daily. We are kind of bumping up against this trend line here. Do have a death cross, 50 cross below the 200-day, but the 50 is kind of flattening out here. This one could be interesting. I mean, Baba took a 10% stake in this one in February. Not a great candle right there. You take out 1350. I mean, we come back down easily in this environment, come back down and test that $10 area, 9.50, $10 area. So, uh, worth keeping an eye on for a trading opportunity, depending on earnings. But and I need to take out 15 with some real conviction. ADSK. So this has been one that has been very strong, and I got to tell you, this is not looking all that great right now. ADSK. So this one kind of looks like we got a bear flag here, right? So below the 200 day, tried to get back above the 200 day, couldn't quite do it. These guys report Tuesday after the close, right? If they disappoint, this thing could be heading down into the 118, 120 area, is what I was looking at here. And I just think it's worth keeping an eye on this one just for the overall tech space, right? So if these guys disappoint and this thing breaks down, could weigh heavy on the tech space. So worth keeping an eye on ADSK, and could potentially be a short if these guys disappoint and give a bad guide. Plan. So recent IPO software infrastructure, flirting with the $60 holla. You take that out, your all-time highs. If these guys disappoint, maybe this is the end of a very nice run, and you see a trend reversal on this one. But I think it's worth keeping an eye on. PLAN for a break over 60 off earnings. These guys report. When do they report? It's here somewhere. It's here. Anaplan. They report Tuesday before the open. So, pretty interesting look there on Plan. Yext is one that I have been watching for a long-term hold play. It's pulling back to an area of potential price support, which could be interesting for an entry. It is just below the 200-day. If this thing breaks, depending on what happens with their earnings, if it breaks below $17 and gets down into the 13 to 15 range, that could be an interesting spot for me to look to start to dip for a long-term hold play. We are definitely in a short-term downtrend here. That 200-day seems to be acting as resistance. Earnings are Thursday after the close. Like I said, a break below 17, get down to into the $16 area. I could look, $15.50 to $16. I could look to start dipping my toe with the with the thought that potentially this thing could come down into the 13.50 area, where I could look to add, unless they report a disastrous quarter and give a disastrous guide. Then I might have to just sit on the sidelines. But Yext is one that I do want to build a position in. And then MRVL, another one that I think we need to just keep an eye on for the overall tech space, maybe for the semiconductor space, right? It's at an area of potential price support. If they disappoint, we may lose that price support. That could weigh heavy on the SMH. And I think, the next area of potential support could be somewhere around the 200-day, around 20.75, $21. But I think you need to keep an eye on that name. All right, that is it for this week's stocks to watch list. There are some other names that are reporting that, like Momo is reporting that could be an interesting one. Genco Solar that could be interesting. Alta is a momentum name that appears to be under some pressure. So let's see what happens this week. But I got to tell you, this is a time to be cautious, right? Let's not be overly aggressive. And if if you're not comfortable in this trading environment, there's nothing wrong with having cash on the sidelines. Cash is a viable position. If you decide to dip your toe, play size appropriate, right? Play size appropriate. We are literally one tweet away from a big move in either direction, right? I mean, they're not going to make this easy. I can tell you that right now. Whether it's short or long, they're not going to make it easy. So, all right. Be careful out there, and I will see you all next week. Good luck trading.